Let's dwell on this a bit further. Imran Khan promised the world a Naya or new Pakistan. It's been his constant punchline from campaigning days to now. But what does Imran Khan's new Pakistan look like? It's an uglier version of the old one. The new Pakistan is worse off than the old Pakistan, and the numbers tell the story. Let's begin with jobs. The number of those unemployed in Pakistan has shot up by nearly 10 lakhs. That means that there are 1 million more who do not have jobs now in the new Pakistan. 6% of the country's employable population is unemployed. While there are 4 million more who have gone below the poverty line. At the moment, 25% of Pakistan's population is in that category, BPL, below poverty line. That's 1 out of every 4 Pakistanis who cannot afford 2 square meals a day. Not just that, more than 22 million children remain out of school in Pakistan. As if the economy was not in enough trouble in old Pakistan, things have turned disastrous in the new one. Spiraling current account and fiscal deficits have dealt a body blow. The economy is now in the grip of a recession. Most, if not all, economic indicators are headed in the wrong direction. Inflation, or the cost of things, is shooting up. Last month, the consumer price inflation was at nearly 9.5%, the highest since November 2013. The performance of the agriculture sector is below par. Output of major crops has either stagnated or declined. Large-scale manufacturing activity is slowing every month, down nearly 2% in the last 8 months since Imran Khan came to office. The shortfall in tax collection is up to a record high of 34,500 crore Pakistani rupees in the first 10 months of the financial year. This has resulted in a half-year fiscal deficit of 2.7% of the GDP, the highest in almost a decade. Foreign exchange reserves plunged by almost half to about $7 billion last year. The nation's credit ratings have been cut to well below investment grade, even as economic growth is slowing. GDP growth has slowed down to its lowest rate in 7 years. It has taken a nosedive from the above 5% growth levels it registered in 2017. That's before Imran Khan came to power. GDP has now plunged to just about 3.3%, and the IMF says worse is yet to come. In fact, it says the GDP growth for Pakistan will be less than 3% for the rest of the year. It will slow further to 2.8% in 2020. The Pakistani stock market too is floundering, to say the least. The country's benchmark stock index, the PSX, lost 8,000 points since the time Imran Khan came to power. In fact, the PSX lost over 900 points in trading today, shortly after the IMF bailout was announced. Investors spooked by the tough conditions that the IMF has laid in return for the bailout. They're calling it a sellout. The Pakistani rupee too is seeing some of its worst days. The large trade deficit has prompted authorities to devalue the Pakistani rupee in a bid to avert the balance of payments crisis. Pakistan's central bank has let the rupee depreciate. It is now down a massive 34% since December 2017. Currently at 140 rupees 70 paise to the dollar. That's where the Pakistani rupee stands. Imran Khan is spending more on imports than his government receives on exports. The current account deficit has risen from $2.7 billion in 2015 to $18 billion now. The total national debt of Pakistan has crossed $100 billion. It now stands at a whopping 72% of the GDP. In simple terms, the government of Pakistan is short of funds to pay its debt. It doesn't have enough money to pay the salaries of its employees. This is the new Pakistan that Imran Khan has ushered in.